Good morning, ladies and gentlemen, and welcome to the show. Glad to have you guys here on this Wednesday, the 7th of October, 2020. You know what? Well, it seems like whenever the tariffs go in, trade war happens. It's when we get a Great Depression. The Smoot-Hawley tariffs back in the 1930s set in the Great Depression, and now we got this big trade war going on with China. And now we're entering into another Great Depression. But this depression's altogether different than the one that occurred in the 1930s. And I'm going to tell you guys what. They compare it to the 1930s depression, but there's no comparison. This thing is magnitudes more power to it. If the Great Depression in the 1930s was a Category 1 hurricane, this is a Category 3, a major hurricane. This is worse. But there is another big difference between this time and last time. Last time, they were limited on how much money they could create. There's limitations on them because the money was connected to gold. This time, there's no limitations how much money they can create. But it's going to come at the expense of destroying the dollar. And, another thing about them is they will not act or take action unless they're pushed into it. This first wave of the crisis that we're experiencing right now pushed them into that last stimulus package, and those $1,200 stimulus checks. They don't feel real pushed right now. They feel like they have this under control. And they feel like they can sit back and kind of watch and see what happens. They don't react, but, this thing could turn suddenly on them really big time, because one of the things is these rental moratoriums, on people who are renting homes and also people who have mortgages and stuff. This is all going to expire. Everything's going to start to expire at the same time. And they're not prepared, not at all, to deal with like 20, 30, 40 million people even suddenly not having a home. They're not even close to being prepared to deal with that. And so when that starts to happen, their hand is going to be forced. They're going to react then at that point in time because, if it was just 100 people losing their homes, they would just sit back and let it happen. But when you get millions and millions and millions of people that they don't know what to do with and stuff, suddenly the government will react with some sort of a program. You can bet on it. I'm thinking it's probably going to be some form of UBI, Universal Basic Income, or some new program they'll put in place to try to deal with the situation at hand, But we're not going to see that new program come in until the problem hits. Until they're face to face with this problem, we're not going to actually see this actually happen. And so right now, even though an awful lot of these people don't know what to do, they got bills piling up, they got no job, but they're still in their homes and stuff. The government's just going to sit back and not do a whole lot until a situation gets to the point where there's a major outcry. Then they respond and they go into action. And so we see them delaying this whole stimulus package until they say after the elections are over. We'll see. Because, I don't think the people are going to be able to hold out that much longer. They're reaching the limit of a lot of people are going through their savings. Some people are using equity in their home. They're going through their savings. They're going through, they're expanding the amount of credit that they have outstanding, like they're charging it on their credit cards and stuff just to survive right now. But all of that is only going to carry them so far. And when massive amounts of people start actually going over this fiscal cliff of this crisis, that's when the government will respond with programs. So we're going to have to wait and see. Anyway, let's get started. Let's open up the charts right here and take a look at what's going on. We're looking at a gold price that's up $8.90, $18.85. It's still not up near where it was when it dropped off a cliff, We watched it drop off the cliff when the stock market went down, when they hit heard the news that there's not going to be any stimulus deal until after the elections. And gosh knows, this might be an awful long vote count. It might take them a long time to count these votes. It might take a month or two, especially if the election's close, to actually decide upon a winner. And if the election is close, this is going to make the problem that much worse, because the people are going to be like, if it's not even close, then it might go through an awful lot smoother. But the closer it is, the more it's going to cause huge problems, because there's an awful lot of the countries right now. The country is divided, really, honestly. I've never seen it more divided, and more polarized in this election than ever before in history. So we're looking at 1885 for gold. It's up $8.90 today. Here's what I wanted to say. We saw the market drop off. Saw gold drop off with it. But if you see a major market decline, I mean big time, one that would scare investors, like this one didn't really scare anybody. This is a little drop in the market, but we see a big plunge in the market, and it continues day after day after day, and it starts to mount up into thousands and thousands of points drop. Initially, you'll see gold and silver fall in price. How low could gold fall? It could fall down to 1,600 initially. But here's the thing, and this is very important to remember. At a certain point, if everything's crashing like that, maybe gold will go down to 1,600. All of a sudden, investors will really start to get scared. And when they get scared, they'll start to rush back into gold. At that point, you'll see gold rebound. Will the markets continue to fall at that point, And, that could really send, because see, gold performs not just in deflation, but also in inflation. It doesn't matter. Perhaps it could even perform better in a deflation, because they're only going to let this system deflate so far and before they react again, see? And so we're going through this cycle of them reacting, everything going up, and then it crashing again, and them reacting again, and this reaction is always the same thing. They react by printing money. It's as simple as that. And they're not going to let the system completely collapse. They're going to keep inflating it, and this comes in waves, this inflation. Them inflating the system comes in waves. And the waves are only caused by the deflation. The deflation makes them react, and then they come in with a wave of inflation. And each time it has to be bigger and bigger and bigger. Ultimately, it's moving us toward this ultimate conclusion, which is the hyperinflation. But they only want to do as much as they can get away with not doing. They have to be pushed into action, This is the thing. And so it's a bumpy ride. It's like a roller coaster, up and down, up and down, up and down. And right now we're moving into a little bit of a down cycle. Soon the up cycle's going to come. Okay, so let's take a look at silver today. Silver is $23.68 today. Cryptocurrency today, $335 billion, 58.6% Bitcoin dominance. We're looking at a Bitcoin price of $10,623. Boy, Bitcoin's holding its price good, It held its price through this little shock better than it went down, but it didn't go down as much as gold did. Gold lost a bit more, Bitcoin was up around 10,700, now it's 10,600. That's not a big move. Gold made a bigger move. It went from 1,900 and something. We go back and take a look at gold. It went from 1,900 and something down to roughly 1,880, which is a little bit bigger move. It would be the equivalent of Bitcoin going from 10,700 to about maybe 10,000. A little bit bigger move in gold than in Bitcoin. Okay, Dow Jones today, it's up 417 points. So it's corrected, and it's just about went back up to where it was before all that talk about they're not going to do a stimulus package until after the election. Take a look at crude oil, $39.42. It's like I say, they're keeping it right on $40 or thereabouts. Drops down to 36, they bring it back up to 40. Goes up to 43, they bring it back down to 40. They're keeping it right at $40. Some entity out there is keeping crude oil propped up around $40. I wonder how long they'll be able to maintain that, because people just aren't driving. Around the world, people are staying home. And that means that the transportation industry isn't using as much gasoline, which comes from this crude oil. And so there's an abundance of supply, even with the United States cutting back production. Still there's an abundance of supply. So it makes me wonder how long that they'll be able to maintain this price around $40 before crude oil will slip and fall down to maybe 32, 33, maybe even 30. Because of the virus just keeps trudging along, guys. And we're not going to see a massive usage of oil products until this virus disappears. Bonds and rates today. We're looking at the bonds moving again here. They're going up a couple basis points again today. We're getting the 10-year up at 1.76. The U.S. 30-year at 1.55. Almost 1.56. Let's take a look at the U.S. dollar index today. 93.61 on the U.S. dollar index, and the dollar's sliding down today a little bit over the course of the day. I think this next stimulus package is going to be coming. It's probably going to be 2 or 3 months away. And I think it's going to be a whopper. I think it's going to be up around $3 trillion, I think it's going to be a whopper. And when that hits, expect to see the stock market continue to go up, and gold and silver are really going to get a boost from that. And so is cryptocurrency, And ultimately, what they're doing is they're hyperinflating. I think it's already beginning, the hyperinflating all the markets. At the same time, you got Main Street, which is going through a major deflation. If they put enough money in physical stimulus in the Main Street, and I think they're going to have to, what we'll see is, I think that big fiscal stimulus that's going to come to Main Street is going to coincide with the period where the virus starts to disappear. Okay, I think these two things are going to coincide. The virus is going to start disappearing, probably sometime next spring. And at the same time, they're going to be in the middle of massive fiscal stimulus because they're going to be forced into it. The two of those things are going to come together to make a weak economic recovery, but a real economic recovery, but weak. Not a real, I'm not looking for a real massive economic recovery, but a weak economic recovery. That's when you're going to see the velocity of money explode. The velocity of money is going to go way up. And that's going to start to lead to the beginnings of the hyperinflation. That's the acceleration phase toward the hyperinflation. But, once that gets started, the confidence in the money is going to get lost really quick. And we're going to go into the hyperinflation pretty quick thereafter. So I'm expecting the acceleration phase to kick in this spring. And then I'm expecting by next winter, we to be going into the hyperinflation big time. I mean, it's going to be obvious to everybody at that point in time that we're going into a hyperinflation. And because it's obvious, that's when you're going to see unlimited prices for gold and silver. There's no way I can put a price on it. Because when you're going into a hyperinflation, in dollar terms, there's no way I can put a price on gold and silver. And cryptocurrency, too. And this is what's going to make the cryptocurrencies, is this hyperinflation. of the U.S. dollar, because we've never had a worldwide hyperinflation before. It's always been limited to maybe one country. They'll have a hyperinflation, like Zimbabwe, have a hyperinflation. And then what happens is they're always able to use some other currency that has value to cling to. So, like, if a country goes through a hyperinflation, generally they'll use the U.S. dollar as their currency, like in Venezuela, They'll use the dollar, or they might use Bitcoin. I think they use Bitcoin quite a bit in Venezuela. Anyway, but this is a worldwide hyperinflation. So what do they turn to for something of value as a means of exchange during a worldwide hyperinflation? Well, it's going to be all the fiat currencies going down the tube, all simultaneously. Then they have nothing to use other than gold, silver, and cryptos, primarily probably Bitcoin. So you're probably going to be looking at those three asset classes standing alone, gold, silver, and Bitcoin, as all of the world's value, because this is the first time ever we've had a worldwide hyperinflation. All of the world's value transferring over into those asset classes. What that's kind of like is it's kind of like trying to shove an elephant through a garden hose. The pressure into those asset classes, because those are small markets, especially silver. They're just going to disappear. I mean, they're going to become unobtainable. The price, I can't put a value on the price, because if all the world's value of everything, the land, the real estate, houses, workers, the factories, the value of everything, the value of the currency, everything goes into those three asset classes. Well, I mean, how can you put a price on them? You don't have to have a lot either, if that actually happens. And everything's pointing toward that actually happening. An awful lot of, not just me is saying this, there's an awful lot of other people you can find on the net who have better credentials than I have, who are saying the same thing that I'm saying. And I've been saying this for a long time. This is an unusual circumstance. It's never occurred before in human history, and it'll never occur again. And you don't have to have a lot of these asset classes. An awful lot of people think, I gotta have 10,000 ounces of silver. No. You might be better off, even if you only got 1 ounce, you might be way better off than your neighbors who don't have any. You don't have to have a lot. Even if you've only got 1% of a Bitcoin, you might find that the price goes up so high that I mean, we're going to have to also, I'm going to shut the charts off and talk to you guys just for a second longer. We're going to have to reevaluate what we consider rich in the world we're heading into. We're heading into the depression of all depressions. And the rich guy, what we used to consider to be a poor guy, he lives out of his car. Okay, there was a time, maybe a year or two ago, you saw a guy that lived out of his car. You said, he's poor. We're going to have to redefine all that and understand that guy's got a car. He's not poor. Because the poor guy, all he's got is a blanket. And he's sitting out there getting rained on. The rich guy, he's got a car. We're going to have to redefine rich and poor, because, these bureaucrats out there, and I'm going to just lump them all in together, intellectuals and bureaucrats, they've put us into this situation through their greed and through their manipulation of the system to make themselves rich and make everybody else poor. Where do they think they're really going with all that money? Yeah, they got bags of money right now. Where do they think they're all going with all that money? Do they think they're going to escape with all that money and they're going to continue to run this system the way they've been running it? At a certain point when this system cracks and breaks, you're better off if you are the guy who's got the car, and a little bit of food in your trunk. You're better off if you're that guy than if you're the ultra rich guy that everybody in the world hates because you've stolen all the wealth from everyone else. You know? And, quite seriously, they've created a situation that hasn't existed since way back in the time of A Tale for Two Cities. Except now, it's not just in France. It's worldwide. It's the whole world. And what they've created is there's a condition that exists that causes a giant, enormous fire, it's a levee, I think they call it, or something like that, or they have a name for it when a gas or oil truck's going along on the highway and it spills over and all the gas spills out on the highway. You can smell it for about 10 minutes before it finds an ignition source. And the ignition source could be anything. Another car driving in the other lane, maybe his spark from his ignition coil sets it off. This levee. And it's all of a sudden just enormous blast. But the conditions have to be right for that to happen. The conditions are right and becoming more right every day. More and more angry people all over the earth. Angry at what's happening to them. They've had a good life. They've had everything, anything they want. They want to have steak and lobster that night. They can go to the restaurant and have steak and lobster if that's their desire. They've had that all their life. Suddenly, their lives have been pulled away from them. And they're wondering what happened. Well, these bureaucrats and intellectuals have decided that they're just going to shut the entire system down. Arbitrarily. And now that they've shut the system down, they've created a monster. They've created something that's out of their control now at this point in time. And it's growing exponentially, and they don't know what to do. But it's their fault. It's not our fault that they've made this mess. We just want to do our job. I just want to do my job here and report to you guys. You guys just want to do your job too. You want to get up in the morning, have your toast, have your coffee, get in your car, go to work, and hopefully have enough money at the end of the week that you can go out and have your steak and lobster. Just want to do your job. That's what everybody wants to do, is do their job. Well, these bureaucrats and these intellectuals have decided that they're going to throw a monkey wrench into the machine. And that's what they've done. Now the machine's grinding to a halt, and they're running around like a bunch of chickens that don't know what to do. Well, the people of Earth, how long are they going to take this situation before they say, hey, they figure it out, and they say, well, these bureaucrats and these intellectuals are the ones who created this problem for us. We don't like them anymore. How long is it going to take before they say we don't like them anymore? I'll tell you when the time's going to hit. It's going to start to hit home when these they cannot, the people that rent apartments and stuff and rent buildings and stuff, they can't put these moratoriums on forever, because the apartment owner, in the end, he's going to go bankrupt. And then when he goes bankrupt, then it's everybody out of the apartment because everything's done. The whole apartment goes up, and then the bank kicks everybody out. It's just a matter of time before the whole thing starts to collapse in on itself, And what comes next is not going to be pretty. There's going to be an awful lot of people, massive amounts of people that they can't deal with. The system can't deal with it, and the only one solution they have is to print more money. So they're going to go opt for that solution because it's going to buy them a bit more time. But it's going to destroy the dollar. So, for you guys out there right now who are putting all your trust in the dollar, thinking there's going to be some sort of a deflation and that the dollar is going to go way up in value, That's what happened in the 1930s when the dollar was pegged to gold. Get it through your head that there's nothing holding them back now from printing unlimited amounts of money. And they're going to print as many dollars as there are leaves on the trees in all of North America. What do you think? It's a no-brainer. What's going to happen to your dollars that you're hoarding right now? You better get out and get into these asset classes that are out of the dollar, because they're going to go in the opposite direction. They're going to become scarcer and scarcer. You know? And yeah, okay, you might get a little period of deflation where the stock market falls and the price of gold and silver fall down, the price of Bitcoin fall down. But at that point, it might be hard to get some, and you might be able to get in a little bit cheaper. But the upside potential for all these things is massive, while the downside risk is only small. So if you're waiting, holding off, trying to make an extra 10%, get an extra 10%, the upside potential is unlimited on all this, practically unlimited. Well, gold, silver, and Bitcoin could suck up all of the world's wealth. Could come into those asset classes. So you only need a tiny little bit. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.